Hello, everyone. Today on the final bar, we'll break down the market from three directions: top-down macro, bottom-up stock picking, sector rotation. This is our normal Monday routine. Great way to take stock, pun intended, in each of the main areas of the investable universe: macro, sectors, and individual security selection. We'll talk about all the potential catalysts for the equity markets this week. We have the Fed meeting on Wednesday. We have earnings all starting today with Tesla. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market activity using charts, using the beautiful techniques of technical analysis, of behavioral finance, of investor psychology, trying to make sense of the uncertain markets in uncertain times. What has not been uncertain is the unrelenting uptrend, this continued push higher, even after last week and the end of the week before. As you saw, the distribution ended up being very short-lived. Monday ended up being the low of last week before rallying through and showing strength through the course of the previous week. Today, following through to the upside, a bit lighter overall movement because it's really a holding pattern for the rest of this week. There are a ton of potential catalysts at the end of this week. We could end up in one of three scenarios. I think number one, a broad bullish scenario where earnings are very strong. The Fed, continues a very dovish stance. The market sees that as a huge tailwind and continues to push higher. Option B, the negative one, earnings are underwhelming and/or the Fed starts to, continue to toe the line, if not step over the line into more of a hawkish stance. Start to be a little more cautious about what they're going to have to do going into next year, which could certainly cause a downward surprise. The third option, which is probably the most likely, is a mixed bag. We'll have some positive, some negative. In the end, investors will scratch their heads and figure out what to make of it. Now, we luckily have some fantastic guests on our show to help us make sense of things. We have Mary Ellen McGonigal from MEM Investments coming up tomorrow on Tuesday. On Wednesday, the 28th, Cliff Droke from Cabot Wealth Network. On Thursday, the 29th, technical analyst Bruce Powers joining us once again. Also, as a reminder, tomorrow, the 27th, on Tuesday, our latest episode of The Pitch, I will be moderating a discussion with three fantastic analysts. We have Mark Newton, Greg Schnell, Jeff Huge, all joining me. Each of them will provide 5 stock picks. They will then defend them and discuss them as a group. We'll have a lot of fun discussing some potential ideas and where you should think about looking for opportunities given the uncertain environment, given the seasonally weakest part of the year, but the potential for the market to potentially move higher. Let's continue on with our market recap. So overall, as I mentioned on Monday, we have 3 pieces to the puzzle. Step 1 is the macro perspective, what's happening overall. Let's start there. The S&P 500 finishing about 0.25% higher, new closing high around 44.22, a little bit above that. The NASDAQ lagged a little bit with both the NASDAQ and the NASDAQ composite just above 0, and technology was flat for the day. That is why the tech-heavy NASDAQ was sort of a wash. Mid caps up a little bit. Small caps really the big winner. Energy and materials were the 2 strongest S&P sectors. So the small cap index, which has been certainly underperforming for an extended period of time, finding some juice today. That's one of the missing aspects to this market recently is the performance of small caps, right? Underperformance of small caps is more classic for a bull market exhaustion phase, right? The end of an uptrend is when you see small caps really start to underperform as investors are taking risk off and they're going to the relative safety of some of the FAANG stocks. I would assume that has happened here in periods in recent weeks, and not today, with small caps moving back to the upside. Let's go quickly through some of the other asset classes, then we'll look at a couple charts before we continue on with the sector rotation. So interest rates down today with the 10-year yield back below 130 to around 128. The TLT is our main proxy for bond prices. You can see it actually distributed quite a bit going into the close, but not too far below the zero line. The dollar index a little bit weaker, about 1/3%, but overall the UUP has been right around 24 to 25 for quite a while now. Commodities overall positive, although gold, one that we follow very closely, down about 1/4% using the GLD. And you really have not seen upside follow through in gold. This most recent couple of weeks here, where you saw a bounce lower in stocks and then a move back higher in stocks. Gold really has not participated in that bit of recovery, sort of chopping around, but energy doing just fine with the XLE up 2.4%. The USO, which we usually use as a proxy for crude oil prices, up about 0.4%. The juice, the real upside momentum today, and really from over the weekend, came from cryptocurrencies. Bitcoin back up to the 40,000 range, went above 40,000 just a little bit earlier this afternoon. That's up 9% from where it closed on Sunday's session. But really, this was, we broke for the week on Friday. The Bitcoin was down around 30,000. We talked about, 30 to 32,000. We talked about that 30,000 level as support and the potential for Bitcoin to go higher. Let's go there next as we focus on some of these big picture macro charts. You can see how Bitcoin has improved very quickly, right? Just a week ago, we're talking about the bounce off of 30,000 going into the close on Friday. We're talking about this, bounce off of 30,000. The question whether or not there's enough upside momentum to get above the 50-day moving average to cement some sort of short-term floor. And if the weekend into today is telling you anything, it's telling you there's certainly some appetite for upside speculation on cryptocurrencies, potentially Bitcoin. What's interesting is on a day like today with such a significant move to the upside, we're now rapidly approaching the upper end of the range that Bitcoin has been in for the last 10 weeks or so. If you look after the April high, you had the lower high in May, which is a great tell about the distributing environment here. We broke down through the swing low in mid-May, which was the final, I think, indication. And then you finally had to break through the Fibonacci support level, which was also the low from late February. Now we got down to the 30,000 level, which was a 61.8% retracement of last September to this April. Also lined up beautifully with the lows from January. And that's why we've highlighted this sort of pink shaded area combining those different levels. We then met and bounced off of that level a number of times, including in the last week or two, where we once again dipped down to the 30,000 level, once again traded right back above it, and now have bounced back higher. So arguably, Bitcoin is now very much in a range-bound environment. On the lower end, you have the pink shaded area, sort of the 30,000 range. On the upper end, you have the blue shaded area, it's around 42 to 44,000. And the question is, which one of these directions takes over? Now, my bias has been on negative Bitcoin because of this pattern down at the bottom, the bearish momentum, where every time Bitcoin has bounced higher, whether making a new high or a lower high, the momentum has been lower, which is more characteristic of a bear market phase. That has changed now in the last week, as you've actually seen it break that pattern of downside momentum. We're now making a new high on higher momentum, which is more encouraging. It's more of a bull market development. So the question now is two things. Do we make a higher low if and when we pull back, which we will at some point? Question two, do we get above this blue shaded area, which would also take us above the 200-day moving average for the first time since May? That's what I'd be looking for on the chart of Bitcoin and why I think it's such an important chart here. We also touched on gold. And as I mentioned, you had the bounce higher in the GLD, stocks moving higher as well. Stocks then, bounced off of the low and reverted back to the upside. Gold has really been stagnant for the last week. The GLD finding support around 168 on the tactical side. On the short term below there, the real support's around 164 to 165. Those are the lows from June and July. I would argue as long as we remain above that, this trend overall, the bounce to the upside is still in place. It'll be interesting to see if we're able to put in a higher low this week, coming off of the June low, because we rallied to the moving averages, bounced below it. At one point, the question is which of these levels breaks, right? The 172 level to the upside, the 164 level to the downside. So you can see this pattern with a number of the macro charts, gold and Bitcoin as well, sort of range bound. Finally, just a chart of the S&P 500. We refer to this chart very often. It's worth noting we're making new highs Friday into today on lower momentum. Now, this is still an active trend, so you can't really call this a bearish divergence until we would make a secondary peak. If we would start to sell off Tuesday, Wednesday, Thursday, somewhere like that, and that would be on lower momentum, we could call this a big bearish divergence like we saw in January, like we saw in April. Both of those led to a 4 to 5% decline, nothing huge, but a little meaningful. Now, this is a little different because we're just coming off that pullback from last 2 weeks ago, really sold off into the Monday low around the 50-day moving average. We've now bounced above it. My question for this week, does this turn into another bearish divergence, which would cause me to get, again, more cautious as always when I see new highs on lower momentum? That is the chart to watch there, and just focus on the 50-day moving average, which has been consistent support. Our next segment, step 2 on our Mondays, after we talk about the big picture, is to talk about sector setups and focus on the 11 S&P sectors. Now, there are no shortage of potential catalysts this week, as I mentioned, and I should have mentioned during the macro segment. The two main, we've got a couple, but two that stand out to me. Number one, the Fed meeting on Wednesday. I think that'll be a closely watched one. The last reports we've gotten from the Fed, the press conferences and meetings have been about talking about changing interest rate policy. It'll be interesting to see, given the pullback that we saw 2 weeks ago, given the bounce we have higher with the S&P again going to new highs, all of the earnings this week that are, so far as of last week, propelling the market back to the upside. Does the Fed start to take on a little less dovish stance, a little less supportive, a little less QE sort of vibe, and talk a little bit more about plans to start to change their policy? And if so, I think you would see that as potential major catalyst for stocks. I think any hint of a change from the very accommodative policy could cause the market to go lower very quickly, at least on the short-term time frame. Step 2 are all the earnings, right? We have a ton of earnings. I think it's about 35 to 40% of the S&P members. I might be too high, but I think that's about right. I think it's about 30-40% of the S&P reporting earnings this week. So it's quite a few. Most of the FAANG stocks on a lot of different sectors. It's not just tech and consumer, there's home builders, airlines, defense stocks, payment processors, everything. All of the sectors are represented probably in some way this week. So I think it will behoove you for certain to look at how those reports are affecting the names in your portfolio. Make sure you update lines in the sand before we get to that. In our shifting stock segment, we'll talk a little bit more about particular stocks and what to look for. But I bring up earnings because I think the charts of the 11 S&P sectors could dramatically change based on the earnings that we see this week. For example, Thursday into Friday, a bunch of energy stocks, Valero, ExxonMobil, others reporting, right? That could certainly change the characteristic of the XLE, given the strength or weakness that you see from those reports. Now, when we look at the weekly RRG, which is what we usually focus on in this weekly segment, and again, if you're not familiar with Julius de Kempener's methodology, check out his show called Sector Spotlight. He does a great job using this visualization and demonstrating its value in understanding the rotational nature of sectors going around the benchmark, which is basically here in the crosshairs. In general, you can see the rotation negatively by the cyclicals. Here we have energy, financials, materials, and industrials. In the last week, you've had one of those 4 materials actually go from the weakening quadrant into the lagging quadrant, really confirming the negative rotation that you've seen. This is based all on relative strength, by the way. It's not based on absolute prices, but on the relative movements. This is based on each of the sectors and how they're performing relative to the S&P. So these all going sort of southwest, the direction of deterioration, all being in the weakening quadrant and starting to go into the lagging quadrant, shows you a rotation away from the cyclical sectors and into technology, which is now one of the 3 sectors that is in the leading quadrant, right? Heading in the most constructive direction for sure, I would say is technology, by far the most constructive, maybe followed closely by communication services, which is basically made a little bit of a rotation here off to the right and started to rotate more positively. Real estate remains the strongest sector based on this visualization, based purely on the fact that it's furthest to the right, but it's not most improving. The momentum's actually coming off of the real estate sector. So the energy is going into, energy is a bad word to use there, the support, the power is going into technology and communication services. And again, going into a heavy earnings week. Also interesting to see healthcare, which had been in very much a position of strengthening, now actually rotating down due south, which is a little less underwhelming momentum characteristics. Looking at the 11 S&P sectors in this format, you can see sort of the haves and the have-nots. You can see which sectors are getting it done on a price basis, which sectors are above 2 upward sloping moving averages. That's a really good place to start to see which ones are performing well. And I'll talk you through the ones that are seeing those characteristics. Communication services, consumer discretionary, consumer staples, which might surprise you. Even though the sector itself has certainly shown some weakness at times, there are some names in there which have been fairly resilient, and I would certainly focus on those. Healthcare is certainly one of those. Technology, and then real estate. Let's focus on real estate to start. We've been talking about the real estate sector for a while. I always find it interesting when a sector that a lot of people ignore, something like real estate, is doing well. I think there's an opportunity there because it's underappreciated, there's an under awareness in the markets. REITs are fairly boring. They're not names that you may know, although you might know names like Simon Property Group or maybe some of the tower stocks. But overall, a lot of the REITs are names you are not household names and not products you normally use, even though their businesses and what the equities relate to are things that impact your day-to-day life in a very big way. So looking at the real estate sector in an uptrend above 2 upward sloping moving averages, most importantly, the relative strength that has been strong. And in the first half of the year, very strong. I would say in the last 6 weeks or so, there's been a bit of a tapering off here, more of a sideways market performance. So still doing fine, not necessarily outperforming the way it was in Q1 and Q2. So that's certainly a chart to look for and see if you can make a new relative high. That would indicate absolutely more of a strengthening characteristic. We talk about technology, and the XLK absolutely has been a point of strength. I don't have the green arrow on here yet, but I probably could go ahead and add it. I was indicating recently a couple months ago, just showing this rotation from a clear bullish phase of outperformance to more of a market performing stage of being in line with the market. And then in the first half of the year, really starting to underperform. This is when the cyclicals really shining, going to the upside. Things like financials making new highs into May. But look at how the picture has changed there. The relative low here was in early May. From there, technology has actually been a good relative bet, outperforming the S&P, pushing higher, while a lot of the cyclicals have been struggling. It reminds me how important it is to focus on that relative strength line and make sure that you're in the sectors or leaning into the sectors and charts where the relative strength line is going up. That shows you that you are outperforming. That shows you that you are generating alpha or returns above the normal benchmark returns. It shows you there's a purpose to managing a portfolio actively. So technology so far, especially in the last 2 months, very much getting it done on a relative basis. Let's take a quick break. We'll be back with my next segment, Shifting Stocks. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is your host, Dave Keller, here at StockCharts.com. Thank you so much for joining us every weekday after the close as we focus on the markets using the power of StockCharts, using data visualization to better understand what is happening. And I was often told by my own mentors as I was getting started in the industry, the reasons why charts will go a certain way or have gone a certain way usually are crystal clear in the rear view mirror. Much later, the fundamentals as to why a stock has moved or why something has happened become much more obvious. The narrative starts to click as to why things happen, but price more often than not will lead the fundamentals. The technicals should lead the fundamentals because the technicals are focused on the anxiety, the excitement, the euphoria, the desperation, all of those emotional reasons why investors buy and sell. That's what's reflected in the price of the stock. The reasons why things happen tend to be fairly clear. Down the road, we can look back and see why charts evolved a certain way. So when in doubt, focus on the chart. A couple quick comments before we get to our next segment. Number one, if you have questions for us, send them our way, would you? We do a mailbag segment twice a week. We'll do our next one on Tuesday's show. And again, on Friday, we'd love to answer one of your questions on the air. You can get your questions to us one of three ways: via email, thefinalbar@stockcharts.com, via Twitter @finalbarsctv, via YouTube. Just watch one of our videos, put a comment below the Final Bar video that you're watching. We'll capture all of those questions and hope to answer one of your questions on our next mailbag segment on Tuesday's show. Also, as a reminder, go to stockchartstv.com, use your email address, set up a free account. You can start watching all of our fantastic content, our great hosts, all of our wonderful guests that share their expertise with you day in and day out, all on our on-demand platform. Go to stockchartstv.com. You can also search on your mobile devices on any of the app stores. Just search for StockCharts TV on demand. want to continue on with our next segment today, shifting stocks. So again, on Monday, we talk macro, we talk sectors, and then we talk individual stocks. And there is no shortage of names to review today. I sort of stopped writing. I had so many tickers jotted down here, just in terms of stocks that are reporting this week. It starts today with Tesla, which we'll talk about momentarily, Logitech, F5 Networks, all reporting after the close today. Tomorrow, Wednesday, Thursday, it is a fire hose, and even Friday morning is a fire hose of names reporting. We're going to focus on just a couple of them today, but most of the FAANG stocks reporting in the next couple of days, particularly Apple, Microsoft, Alphabet, all after the close Tuesday. Wednesday after the close, Facebook. I think that's it for the FAANG names. As I'm glancing quickly through like hundreds of tickers here, but many other names that are important. Let's start with Tesla. So if you're not familiar on StockCharts, we have a function called the simple summary page. And if you go to the top of your chart, top of the StockCharts website, what I meant is you click on where it says sharp chart and switch it to simple summary. You can then type a ticker. It'll get you to this page. This is a great way to break down, the fundamentals, the technicals, the earnings picture, all of that information in one page. And this is still very much a work in progress. We're working on adding additional fundamental data. But if you're looking at a company for the first time, this can be a really good way to sort of understand the basic, building blocks of the stock and figure out how you want to dig deeper. This is also really helpful because this is where we actually showcase our after hours data. So especially during earnings season, especially this week, I would encourage you to bring up this function after the close. You know, companies are reporting, you just want to follow and understand what's happening after today's close. This is the place to do it. So today we're looking at Tesla. You can see the little banner at the top reminding us Tesla's reporting today. You can see after hours so far, it's up $8, about 1.2% as of the time we're recording this. Around 4:20 p.m. Eastern. This will update on the after hours session. Just refresh the page to see the latest tick. So Tesla was up 2.2% today, around 657.60, trading up another 1.25% so far. It seemed to be a fairly constructive report so far. So right now it's around 665, which is not too far. It's just sort of right around there. This is a very skewed chart because I'm looking at the last year and we're coming up from a fairly low level on Tesla. So, year to date for Tesla has been fairly challenged. And this is what we might call a is that right? Call it a descending triangle pattern. You really can't call it a head and shoulders pattern because there's no left shoulder. It's a head and shoulder pattern, what we might also call a descending triangle. A descending triangle is where the highs are getting lower, but the low is fairly stagnant. So it's like a triangle, but it's actually pointing downwards a little bit. So what's interesting about this pattern is you are really at a key juncture and you're range bound, similar to the chart of gold that we talked about, similar to the chart of Bitcoin that we reviewed earlier in today's show. You have resistance around 700. That's the peak from really the end of June, beginning of July. We keep bouncing off that 700 level and coming off. So that is really the trigger that would indicate more of a bullish configuration, being able to eclipse that key resistance around 700. You also have a very clear floor around 550. That's the low from March. That's also the low from mid-May. If and when we would sell off again, that's where I would be looking for support. So at some point, after going sideways for an indeterminate amount of time, Tesla will most likely go above 700 or below 550. In this sort of chart, this is never easy, this game, but I would argue this is one of the easier charts to make sense of because one of those things happens. We either break to the upside above resistance or we break below support. And I would follow that closely to see which way that breaks to understand, where we may be going next time. Another, let's see, just a couple others reporting after the close here. And what I'm going to do is bring up the simple summary page to see what happens. I've not looked deeply at the earnings. And again, we don't have scope in this 30-minute daily show to be digging too much into an early earnings report. So we're focusing just on the chart. Logitech after the close as well, down about just a little bit below zero, not too much. The chart of Logitech has been, okay. It actually reminds me a lot of the financial stocks. The big move really into May. Here was a little later into early June. From there, it's come off a little bit, and you can see the short-term pattern of lower highs and lower lows. On a stock like this, you look for earnings to give you a catalyst to break out of that pattern, right? To signal an all clear and a return back to 140, you first have to get above the most recent swing high, it's around 127, 128 or so. So earnings get us above that resistance level and breakout. That would be the key that I would be looking for. If not, though, if this is more of a disappointment, again, you continue this pattern of lower highs and lower lows, and I would assume that continues until proven otherwise. The other one, F5, FFIV, we'll look at that one as well. Kind of an interesting chart. So let's see what's happening so far. So actually up in the aftermarket, around 199.50, up 3.5%. So certainly it's appeared to be a nice win. So it was up around, what did I say, 200. So it's kind of up around here so far in the after hours. And again, this is active, so a lot can happen. But, this is sort of what we talked about with Logitech. What you want to see from earnings is earnings as a catalyst to change the character of the chart. From what's happening in the aftermarket, if we open around there tomorrow, we show some follow through to the upside. That would take us above this swing high from June, which I think would be a really key indicator for something like F5. If that happens tomorrow, if you do get that follow through, I think that clears the way to go up to the 210, 215 range. That's retesting the highs from April, also from the first quarter as well. That would be a decent upside target, would really mirror the size of this this consolidation pattern and sort of extend that to the upside. So that would be an interesting follow through. If you get that, also the RSI would most likely get above 60, which would be more characteristic of an upside, a bullish phase. We need to wrap the segment here, but the last thing I would just point out is the chart of Apple. This is the chart we've been looking at for quite a while, really setting up to go to the upside. I've not looked at this in the after hours. They're reporting after the close tomorrow, along with Microsoft and Alphabet. So all eyes on those earnings releases. But I think this is, setting up potentially to be just a beautiful bull market indication. Especially last week, you traded back below the breakout level, but then just turned on a dime. And then the last 5 trading days have just been continuing to push higher, especially the end of last week and today getting more of an upside follow through. So I think, going into earnings tomorrow, this is setting up very, very well. And you have clear support now, sort of around 142, which was the swing low from the recent pullback. I think remaining above there overall keeps that chart in a very constructive pattern, and hard to imagine the market going down too much when a $2.5 trillion market cap stock is looking like this. We need to wrap the show, go to the 3 and 3 charts in 3 minutes. Here we go. Chart number 1 is Amazon. Again, not running out of, we have so many charts to focus on. Amazon's on Thursday reporting earnings, similar to the chart of Apple, which is breaking out, then retested and moving back to the upside. Amazon has this beautiful 10-month base. We highlighted it when it broke above that base there in early July. From there, though, came back and tested the breakout level from above. Now, that is a classic technical breakout pattern. We call that a big base breakout. We have a big consolidation phase. You break above the resistance, you come back and test the resistance from above, that becomes support. That is a classic breakout pattern, and more often than not indicates much further upside in store. And I think that's what I'm seeing on the chart of Amazon. What would tell me that that thesis is incorrect is a break below 3,500. And I think that is a very important line in the sand to watch on that chart. Tesla, number 2, we mentioned, what's going to happen here as they report earnings after the close. We'll dig into more of that after the show. But overall, I think your range bound here was 700 on the top, 550 on the bottom. These charts, as I mentioned, are some of the easiest only because at some point you have to break out of that range. And I would argue whichever way we break out, that is the momentum. That's the direction of momentum that you would most likely want to follow. Finally, the chart of Bitcoin, again, it's relatively range bound as it remains. We talked about the potential bounce off of 30,000 when it sold off to that level. That's a Fibonacci level. It's also the lows from January. We, not surprisingly, bounced off there yet again. We accelerated to the upside over to the weekend and really continued to the upside today. It's coming off a bit, coming down from 40,000 plus down to 38,000. So plenty of volatility still to be had, but I'm very interested on the fact that the RSI has now broken this pattern. We are making a new swing high on higher momentum, and that should be seen as more of a constructive rather than negative sign for Bitcoin. Folks, that is our show for today. Thanks for joining us on a Monday afternoon to break down the key signals for the macro picture, the sector rotation, and the stock-specific analysis. Join us again on Tuesday's show. Keep your questions coming. The final bar at StockCharts.com is our email. We'd love to hear from you and answer one of your questions on the air. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.